All right, so we're going to start right away. So when others join, they'll get the recording if they are not able to connect with us. So yeah, we stopped yesterday on liquidity, Asian session liquidity, and then someone asked a question concerning confluence, and then I said confluence is using one or two confirmations to confirm a trend. Okay, like this now we have a trend to confirm a demand or supply zone. Remember what I said yesterday, first things first, you need to identify the market's trend. Is it an uptrend or a downtrend? After identifying the uptrend and downtrend, if it's an uptrend, what do you want to do? You want to buy in an uptrend, so definitely you look for what? You look for demand zones. And then if it's in a downtrend, you want to what? You want to sell in a downtrend. So then on a downtrend, you look for what? You look for supply zones. Yeah. So after that, we're talking about how to use confluence to know that okay, this supply zone is a valid supply zone or this demand zone is a valid demand zone. And then we looked at the meaning of confluence, which was adding up of one or two confirmation just to give you a good perspective or a good and solid confirmation that the supply zone or demand zone you've chosen is a very, very high probable demand or supply zone. Okay. So we talked about Fibonacci first of all. Then after Fibonacci, we talked about liquidity. And then we talked about support and resistance liquidity and then liquidity in the trend. Then Fibonacci, like I said, we always want to use zones that are above 0.5 because we want to buy in a high position. Okay. We want to buy in a high price rather. We want to buy high. We want to buy in a high position. Then we should be looking for zones that are higher than 0.5. Like over here now, we have a supply zone that is on 0.7. There is no supply zone on 0.6 at the moment. Yeah, there's no supply zone over there. So that is one confluence like that for this supply zone over here. So this is a high probable supply zone because now it's already on 0.7 Fibonacci level. That is one confluence. Okay, so something's telling us that that supply zone and this supply zone here is a high probability supply zone. Let me delete everything I have over here. Yeah, so the supply zone is somewhere here. So that is a high probability supply zone. Then which other thing can we use to confirm that okay, this supply zone over here is a confirm or valid supply zone without the Fibonacci? Now we've gotten Fibonacci, then we want to use the next thing to use is actually then you can use liquidity also. You can use liquidity. Okay. Then remember what I said yesterday. How do you find liquidity? You find liquidity when there is a lot of orders in a particular zone or a particular area in the market, like this. Number one is support and resistance. Secondly is high and lows of a trend. And then thirdly is Asian session liquidity. Okay, so I'll go through Asian session liquidity now because Asian session liquidity is also very, very important. Yeah. Now you can see here Asian session is like a dead session in the markets. Asian session is like a dead session in the markets whereby, let me reduce my volume because of the sound of the Google Meet. Okay. Asian session in the markets, you can see now I've used my indicator to mark out the Asian session. That is like the dead hour in the markets whereby traders are not much in the markets. It's only creating volume. Okay, just volume is created here. Orders are created at the top of the Asian session and orders are also created below the Asian session. Okay, so if orders are created, okay, where is the trend line? Yeah, you can see now this is the trend liquidity, right? So where is the liquidity inside this trend? It would be here. Inside this trend, it will be here, the way I explained yesterday. It's going to be here, right? So there's liquidity here. So we believe the market should sell into this supply, into this liquidity, just like that, and grab the liquidity. Since there's no support and resistance, you can see there's no support and resistance. This one is a trend. It's a trending zone. So we know that liquidity, market will grab liquidity over here. Okay, so that is why we're using that. That will be our target zone for the liquidity grab. So let's move to another Asian session over here. Now this one is a ranging session, right? It's ranging from up, down, up, down, up, down, up, down. So there's liquidity at the top. We believe some people are selling from here, some stop losses are here, and then some stop losses are also here. So we believe the market should grab the liquidity below and then grab the liquidity above. But look at what happened over here. Look at what happened over here. They didn't grab any liquidity below here, though there are some reasons for that. Okay, there are some reasons for that, but I won't go deep into that in these lessons. Then you can see, but it's grabbed liquidity at the top over here. At the top over here. So, and you can see what happened. It went up, shot up immediately, came to this supply zone over here. You can see what we are talking about now. And then it sold off immediately. Okay, so I believe you get the gist now. Let's move to another Asian session again. So looking at this Asian session, is it a trending session or a ranging session? Definitely is ranging. So it means there's liquidity at the top over here and then liquidity below here also. So we believe that there are stop losses here and then there are stop losses here. So we expect the market to run through all these liquidity points and pass through. But look at what happened. It's passed through just the one below. Didn't pass through the one at the top. Okay, so nonetheless, it doesn't mean this Asian session liquidity at this top is not valid. Like I said, there are some reasons that it didn't grab liquidity here. You understand? So let's move to another Asian session again. This will be the last one I'll be explaining. Okay, this one is also ranging. You can see it didn't take out the highs but took out the lows and then started selling off. You understand? So this one too, this one is trending, uptrend, like that till the Asian session finish. So where is the liquidity now? We expect that liquidity is at this top over here, at this high, okay, or at this low. So took out the low, went up a little bit, went up, and then eventually this one took out the high. You understand? So from all the illustrations we've seen right now, it means markets won't always take out the highs and lows of the Asian liquidity. You understand? But there are some times that you should know that it might take out the high or the low, or the low or the high. You understand? So what is liquidity? Liquidity is where there's a lot of stop loss, and then you don't want to be trading where there's liquidity. Okay, so I'll stop there, and then let's go back to our Euro USD. Now this is our Euro USD supply zone, this single supply zone over here. Everything is bearish on the 1 hour time frame, and then want to confirm that this supply zone is a valid supply zone. So if we use Fibonacci, then what liquidity can we use again? There's a wide liquidity here, you can see. Let's look at the trending liquidity. You can see there's a trend line liquidity over there. Yeah, there's liquidity there. And looking at support and resistance also, look at this zone here. Yeah, there's liquidity at the top over here too. So let me use trend line again. Yeah, so there's liquidity at the top. Okay, now there's liquidity everywhere below this demand, below this supply zone. You can see now there's liquidity below this supply zone. So look at the supply zone now. Now there's a beautiful supply zone over here, right? There's a beautiful supply zone here. Yes, it's a beautiful supply zone because we've gotten multiple break of structure. Let's draw out our break of structure for the first supply zone. Yeah, break of structure below. Then this is the next supply zone, right? Yeah, this is the next supply zone. Now look at what's happened here. This supply zone, we have one. This is another supply zone. But what is different between these two supply zones right now? Look at this supply zone here. Let's go back to our first conference, which is the Fibonacci. You can see one is on 0.3, which is below 0.5, and one is on 0.7. That is one. Secondly, one is above liquidity, one is inside liquidity. You understand? So looking at this pair, there's high probability that markets would want to grab the liquidity over here. Markets want to grab the liquidity over here, or the liquidity inside this place like this, because we know that once there's liquidity, it means that there's a lot of stop loss at this points. There's a lot of stop loss over here. We know that people are trying to sell from here. People are trying to sell from this supply zone itself. You know, people are trying to do a lot of things inside this place. And what would eventually happen? Okay, markets would try to take out their stop loss, move in their direction. It can even, you know, sell a little bit. a little bit and then move up again and then enter this extreme supply zone and sell off immediately. You understand? So it's not like it's just move once and for all like that. So that is liquidity for you. Now, what are we talking about here? If you are trying a supply zone or a demand zone and there is liquidity above you, it is very, very dangerous. Okay, it is if you are looking for supply and then there's liquidity above, you can see now there's liquidity above, there's trendline liquidity and then support and resistance liquidity. Okay, there's liquidity above. But let's move to the Asian session liquidity now. The Asian session liquidity is not really for analysis. Okay, you can see there are already 2 Asian sessions here, so we really don't need Asian session now. We'll be looking at Asian session later, but we're not even here. That will be for whenever you want to, look for confluence again when you are trying to take a sell inside this place. Then you can use the Asian session with it, and then there's something we call the London Q zone. But right now, I'll be taking you guys through what will just make you, consistent, at least with the charts. You understand? If you can identify liquidity, not going deep, not making things too hard for yourself, then this is fine. Okay, confluence is enough and this is enough. Now, if there's liquidity above you and you are inside a supply zone and you are trading a supply zone and there's liquidity above, you can see that it's very dangerous because there's very high probability that markets will grab the liquidity with the supply zone above. Okay, so let's look for little examples before we move to demand. Now looking at this supply zone over here, which extreme supply zone can I use here? No, it's not so fine. Okay, now I'll be using this demand, but we're talking about supply first. So let me explain demand soon. Okay, so demand is the opposite. If you are looking for a buying opportunity and then there's liquidity below, or okay, let me draw it out first. Now we have a demand zone here, right? And we also have a demand zone here. We also have a demand zone here. We have a demand zone here. Okay, so now what's the first confirmation is the Fibonacci. You draw it from the low to the high. This is an uptrend. Yeah, so the first zone is nicely below 0.5, which is on 0.8, and the second zone is very extreme, which is exactly on the 1%. So you can see now 0.8 did fine. Then what's the second confirmation is what is the liquidity. You can see there's liquidity below, there's liquidity above the demand. Okay, there's liquidity above the demand. You can see there's liquidity here. It means there's a lot of stop losses here. People are trying to buy from here, right? Buy from here. That is support zone. Stop loss will be here and then CP will be here, right? Then look at what happened. But with the use of demand and supply now, you already have an extra knowledge. So see what happened here. 0.6 demand level. So let me draw the break of structures because break of structure is very important. If there's no break of structure, that demand zone or supply zone is not valid. Okay. Yeah, so some people have been asking order block demand zone, order block demand zone. Like I said, order block has more characteristics than demand and supply. Demand and supply is still very much easier to identify, you understand? But when you're trading order blocks, you need to see there are some other things you need to add, like the fair value gaps, some breaker blocks and the likes, you understand? So that's where I'm going with supply and demand, since it's almost the same thing and it's very, very easy to identify and simple to identify. All you need is just to look for the down move before the break of structure, the down move before the break of structure, which is the red candle. So look at what happened here now. Those people trading support and resistance. Some people have taken buys here. Now you can see what happened. There's a lot of stop losses here. And then definitely markets wants to take out people's stop losses at first. You can see now using that same stop loss, we got in over here with a nice risk to reward 1 to 5 ASAP, just like that. Okay, so you get the idea now. This is a confluence. We use Fibonacci. This one was below 0.5, which was on 0.6, but was not on 0.7, which is still fine. 0.7 was around here. Yeah, around that week, you can see, and there's no valid demand zone over there, just on the imbalance. Okay, so that is why I didn't use 0.7. So you understand my point now. Now, when trading demand also, when you're trading demand, what do you need to watch out for? There must not be liquidity below you. Okay, like this. This is a valid demand zone, right? Let me delete that. This is a valid demand zone. So people can start dropping their questions. You don't need to wait for the class to end before dropping questions. I'll get the questions. So look at this now. Is this not a valid demand zone? Look at it. This is a valid demand zone, right? We have break of structure. We have the down move before the movement. The break of structure is giving us confirmation. But when you come to the Fibonacci, that's the first thing you want to use. Draw it from the low to the high and see what happens. This one is above 0.5, and then remember, we want to buy low, sell high. As demand and supply traders, you want to buy when buyers are really demanding it, and then you want to sell when sellers are really selling off. You understand? So let me zoom in a little bit. Now you can see it's exactly on 0.2 over here, 0.2, which is too much, which is above 0.5. Remember, I want to take trades below 0.5, around 0.6, and then 0.7. Okay, so on 0.6, is there a demand zone there? Yes, you can see it's a demand zone on 0.6. But looking at 0.7, is there demand zone on 0.7? There's no demand zone on 0.7. You can see now there's no demand zone, so I'll be ignoring 0.7 and been going with 0.6, and then you can see what happened. Came exactly to 0.6 and then went off. So when you are trading liquidity or demand and supply, you can see now this is why most demand and supply traders find it difficult for their demand to work out. You understand? You know, there's a lot of demand and supply in the market. Okay, demand and supply zones. You can say this is a demand zone over here. You can say this is a demand zone over here. You know, there are millions of demand zones and supply zones everywhere. Millions of demand and supply zones everywhere, but your ability to filter them out and know the ones that are high probability is going to help you a lot. Okay, then look at it now. So you then definitely you filtered out this demand over here. You don't need it, and this one you might still need it because it's at the real extreme. Okay, and there's still liquidity above it, but this one too is also a nice demand because there's still liquidity above it, giving us confluence. And then look at what happened. Okay, wicked a little bit, then started moving upward. Okay, so that is the way demand and supply works, with using liquidity as confluence. Yeah, same thing here also, you can see. So let's just go back in time a little bit. Now let's look at what happened here. Some people might say this is a demand zone, right? But why did it not work out? Because we had the break of structure. There's liquidity inside. There's liquidity there. And then looking at this, why it did not work? Yes, it might not work because looking at the overall trend over here is a downtrend, right? And some people might want to say, okay, this is not a break of change of character now. Change of character. Now, so something about change of character, let me quickly explain that, which I didn't explain it yesterday. Okay, I didn't explain it yesterday. Now, where was the pair I explained change of character? Was it this pair? Not this one. So look at this BTC over here too. Okay, we have this supply zone here, and then there's liquidity here, so it's making this supply zone a valid supply zone. You can see. So that is just it. Which pair? I can't remember the pair now. But I was talking about change of character yesterday. And where did I stop? Yeah, so let's go back to Euro USD. Sorry. So why did that demand zone not work? Now, the mistake most people make when trading change of character is this. I'm not planning to say this before because it was not part of the timetable, but I think it's also an important topic to discuss. Now, when you see a change of character, what does it mean? It means that is the first, it's like a break of structure, right? Yes, you can change the break of structure if you want. Fine. It's just a change of the words. But we're using change of character because, you know, it's the first break of structure after the strong downtrend over here, right? After this downtrend over here. That's the first break of structure. That's why it's called change of character. So change of character is like signifying that this trend is about might want to, you know, start moving from the downtrend towards to the uptrend and just continue going up like that. Okay, that is the meaning of change of character. Is like signifying. Now, after seeing a change of character, the next thing you want to do is not to enter immediately, even though you've seen all the confluence, maybe like the Fibonacci, liquidity, Asian session, blah blah blah. The next thing is that you don't want to enter immediately. Why? Because it is not a break of structure. Okay, when you see a break of structure is when you want to enter. So then when will the next break of structure be? You should be here. It should be here. The next break of structure should be somewhere here after breaking this previous high to give us a new high. Then, you know, then you can be looking for valid demand zones somewhere around here for your what? For your entry. You understand? Breaking out. So now this one now become break of structure. You understand now? So when there's a market shift, breaking structure, now it means okay, it has changed character, fine. It has changed character, then it has also broken another structure, meaning it has broken structure once here and then twice here. You understand? So two break of structure or a change of character and a break of structure. You understand? Then you can now wait for your entry here. This will be the ideal way to enter after seeing all your requirements like the liquidity inside here, Fibonacci and the likes. Okay, and then this will be your ideal zone for entry. Over here. You understand? So that will be the ideal zone for entry. But look at what happened. There was no break of structure. You understand? It didn't break any significant high at all. It didn't even break out of this zone. So it just continued following the trend. Okay. So every change of character, what am I trying to say now? Every change of character does not signify that the trend will actually change. You understand? Because come to think about it, because you are seeing just one single change of character does not mean the next thing that will happen is the trend to just continue pumping up just like that because of your change of character. No. Even after seeing everything. So that's why you have to be extra careful, taking extra measures so you don't get on the wrong side. And then when you look to the left, you notice that, wow, look at what just happened over here. There's a supply zone there. And you can see how the market reacted to that. You can see how market reacted to that. So touching it once, 2 times, 3 times, 4 times, and the likes. And then it came back to break structure here. Yeah, that's the ideal entry. Okay, because we had the break of structure over here. Can see. Yeah, so this will be the zone you want to enter from. And target to be anywhere you desire. You understand? So it's always very important not to get on the wrong side. Always very, very important. So you don't get on the wrong side. Okay. You can see now. So Adam, we were just looking at the change of character here. There's a change of character. Market to start pumping, but you've forgotten that there's still something at the left the market is reacting to. You understand? So you just get on the wrong side, just like that, and then you're out. And you're like, wow, it is my stop loss. But I'm a smart money trader. I'm a this, I'm a that, this and that. You start looking for excuses, and you'll be like, no, the market is against you. The brokers are cheating, stuff like that. Then, what I wanted to also add is when a supply or demand zone has been touched more than once, what has happened? It has created liquidity. Yeah, you can see that supply zone has been touched more than once. You can see this is the initial supply zone here. We had break of structure here, break of structure below. Yeah, so where do you want to draw a Fibonacci from? Let's just quickly check. We can draw it from this high to this low. So you can see it's exactly on 0.5 and 0.6. You understand? There's no supply zone on 0.7, so I'll be going with 0.6. So we see a valid supply zone. And now, looking at the first touch, what happened at the first touch? What happened at the first touch? Touched it, sold a little bit, trying to go into it again, sold again, went into it, sold, and then still came back to sell off. So what do you want to do in this kind of situations, whereby the supply and demand you've drawn out is giving you has given you multiple touches? Okay, for me personally, I really don't experience this. You understand? You know, it doesn't happen every time. Maximum touches should not pass 2. You understand? Because sometimes some touches will be due to fundamental events like news. You understand? All these sudden moves. So 1 touch is still permitted. Like, okay, you can still trade it when you get a touch, but when you get the second touch and then you want to trade the third touch, is dangerous because now you are trading inside liquidity. Okay, only if you want to be taking extra measures with your confirmation entry. You understand? With your confirmation entry, you can still take trades inside liquidity. You know, on my YouTube channel, you can see a lot of videos that I made taking trades inside liquidity, but there are some factors to consider, like the confirmation entry and the Asian session liquidity grab during the trade. Okay, so look at this also now. Looking at this demand zone over here. Yeah, we have this demand zone here nicely. You can see there's a break of this previous high, giving us a new high. There's another breakout here too, and now we have 2 demand zones, right? We have 2 demand zones. Yeah, we have 2 demand zones over here. Now, where do you want to draw our demand from? Fibonacci. You can draw it from this low, but it's always nice to draw it from the low of the demand zone you are drawing out to the high. You understand? So this one is below 0.5, showing that it's kind of valid, and then there's no demand of 0.7, and then this is the likes. Now you can see there's confusion. Now this is where the confusion comes, and you're like, but this one is below 0.6. It's meant to be active, this and that. It's meant to be a valid demand zone. It all points down to your entry confirmation. Okay, it all points down to your entry confirmation. So when confirming, you also want to look for confirmations inside this demand zone. And I don't think I can go down to smaller time frames right now for entry confirmation. But looking at this is a nice demand zone actually. So first thing you can see now, you can see it went up, means you might have gotten an entry confirmation over here, gotten stopped out. Your stop loss will have been hit, came down a little bit, and then went up in your direction. Okay, but nonetheless, it's fine. You can get your stop losses hit sometimes. You understand? Because this is a valid demand zone. Just that now there's no much liquidity confirming this, unlike this. You can see now this one is very extreme. It's very extreme demand zone, and there's a lot of liquidity here. Yeah, so you can see now your stop loss was taken here, so there's liquidity there also. And your stop loss has added to the liquidity, your balance has added to the liquidity. Though I don't think we traders, our balance add up to liquidity, but it should if this kind of things are happening. Though the liquidity that people at big banks are targeting at the retail banks, not we retail forex traders. You understand? As long as our stop loss is not up to $2 million, $1 million, I don't think we are the targets. But you know, we trade like the retail bank, so that is why it looks similar and looks like it's the forex traders market is targeting. So it's always a war against banks, you understand? Then this is the next demand zone over here. Okay, and you can see what happened. Stop loss will be below like this, and then TP will be somewhere here. Okay, and it's played out fine, just fine. Okay, so your confirmation entry will be here, and you have gotten entry inside that demand zone. Okay, now looking at this liquidity graph is more of like confirmation. Some people also use what is called inducement. Okay, yeah, let me quickly explain inducement, because some people like to ask what is inducement, and that's where I'll be stopping for now. So with all my explanations over here now, you can see demand and supply. You can easily identify demand and supply and how to trade them. Okay, so now trading, let's assume you want to trade the supply zone. What do you want to do? You can go to the smaller time frame, like the 5 minutes, 3 minutes, depending on your type of trader you are. If you're a scalper, you can you can still look for buys inside here. To instead of waiting for it to come, you can definitely look for buys inside this on its way up. You understand? Or else you can just wait till market touches the supply zone. So when the market touches the supply zone, what do you want to look for? Same thing you looked for on the 1 hour time frame. You want to look for pile of liquidity, but this time around it can be the Asian session liquidity. You understand? So the Asian session liquidity should form around here. Delete it and make it more. Okay, so Asian session liquidity might form around here, just like this, and then this will be your entry, right? So what do you want to look for on this entry? You want to look for a break of structure, and that is what you want to do to sell. Okay, so Asian liquidity is here. This is the supply zone above the liquidity. Now you can see it's above the liquidity, and then you just want to look for your confirmation entry. Though sometimes some people don't really use Asian session confirmation again. What they just do is they just look for sell immediately. They put their stop loss above like this, enter, and then take the sell immediately. You understand? But it's always nice to look for confirmation entry with the London session after the Asian session. Yes, something like this. Okay, so that will be how to look for entries. You wait for liquidity. You can see now there's liquidity here. There's liquidity here, so this is enough. You can see now this is enough confluence on its own. It's enough confluence on its own, just like that. So, like I said, you can take counter trends, but I'm not here for that. I'm not here to explain it. So all I've explained right now, remember, this place is not valid. This is the valid one. So remember, identify the trend. So this is enough to make you consistent. You understand? It is enough to make you consistent. Just look, identify the structure. Is it a bullish trend or a bearish trend? Then if it's bullish, what do you want to look for? Demand. If it is bearish, what do you want to look for? Supply. Just like that. And what is the next confirmation you want to use? You want to use your Fibonacci. You want to use your what's it called now? Liquidity. And then the last one that people always use is inducement. Okay, though some people always use indicators. Let me check if this indicator is there. I don't think I'll be able to use this indicator. I'm not able to use indicator. I'd love to show you, but it's on my YouTube channel. You can just check it out. So that is one more confluence. And then the last confluence, which I also use sometimes, is inducement. Okay, so what is inducement? Is like this always when market is about to get into the supply zone, almost gets into the supply zone, and it just sells off like that. You understand? So you can see now this is inducement because it's trying to create a fake panic move for sellers that I think this thing is about to start selling. Let me get inside. So people start selling. People start selling, and then when it's time, what will happen? Go out and take their stop loss again, enter the initial supply zone, and then sell off. You understand? You understand? And then sell off immediately, just like that. Okay? So you can see this is inducements. You understand? So it's just trying to create panic moves before the initial move. So let's go back to the chart. I saw a zone like inducements some minutes ago. Okay, so you can call this inducements. You can see the buy is very aggressive over here. Is there actual liquidity in the crypto markets? No. There's nothing like session when you're trading crypto. There's no London session, New York session. Though it's always tries to mimic the movements during the London session, you understand? But then there's nothing like that. Then can you show a change of character when the market is an uptrend? I think I just did that. Okay, I've not shown you that yet. So those are the questions. Now you can see this is inducements. How many minutes up are we? We shouldn't be more than 20 minutes. Oh, that's 5 minutes. So I just don't want to make this too long because it's night already. Then you can see now this is inducements, right? Fake movements. You can see it's even created a demand zone. You understand? So this will be the demand zone here, over here. You understand? But this is the initial or extreme demand zone we are looking for from this trend over here. From this trend over here. You understand? So this is an inducement making, created fake movements, though it even went up massively. You understand? So it wouldn't make you think that this demand zone will still eventually hold again. You understand? So that is inducement trying to take the initial buyers that are waiting for this demand zone to give up. You understand? To give up, to want to enter over here. But this one even went up a little bit. Though there are some inducements that just go up a little bit like this and then drop into the extreme demand and then continue moving in their direction. So the market is always moved by greed and fear. You understand? Market is also moved by greed and fear. So once people are buying here, greed is entering, and you understand. But now they're already scared to enter here. Why? Because this looks like it has moved, and then this looks like it's not going to work again. You understand? So people are not confident to enter this demand zone. But if you know what you are looking for, you've gotten your confluence. This one is below the 71%, which is very extreme, which is also nice, and you can see what's happened at least up to this point. So same thing again, is like the market repeats the same cycle. Okay, there's liquidity here, over here. This is a demand zone here. This is a demand zone. And look at what happened. Just pierced a little bit and then went up again. So did the same thing over here. Supply zone. Though remember the trend is in a downtrend, so the sells are sharper than the buys. You can see. And now you can see what happened. The buy is sluggish, but the sell is active. Buys are sluggish, sells are active. That is because we're in an overall downtrend initially. So someone said I should change of character in an uptrend. Which one did I explain before? Which one did I explain before? I was explaining this. Okay, I was explaining the downtrend. Now uptrend. Yeah. So this is an uptrend, right? So where is the first break of structure? It is here, over here. Now you can see the case is different here, right? The case is different here. So looking at this massive break of change of character here. We've gotten multiple break of structures alongside it. So it's still nice that we can use this extreme supply zone. You understand? If we say we should wait for another, as the market didn't even get there. So the trend has shifted. But normally, if you look to the left, it's still overall bearish if you look at the weekly time frame. Okay. So but inside this counter trend, you can call this a change of character, and you can expect sales here. But you can take your sales immediately here and not waiting for another break of structure. Why? Because if you are waiting for another break of structure, you have to break this extreme low over here, which is this. You understand? Which is this break of structure here. So you have to wait for it to break this break of structure before you can take another sell from here. You understand? Meanwhile, it has sold off with wasted pips. You understand? The pips has wasted. You can't have anything to do again. You now have to wait again till it enters the extreme, and then you want to sell. So you can see you've wasted a lot of pips waiting, going up, and then just want to sell over here. Wasted pips and you wasted your time. You understand? So it's always nice to, you can just sell off when you get your confirmation entry and then take it away. But look at this, the case is different here, right? The case is different here because the zone is not extreme. You understand? You can just still wait for a break of structure here for it to come back into this demand zone. It won't take much pips and much of your time. You understand? That is why you have to check the market movement and market behavior, market conditions also. So I think I've explained everything that I've dropped on the group, right? So these are easy ways to become easily consistent. You understand? You don't have to rush. Though it's a 2 days, 3 days class, but then tomorrow we'll be looking at where BTC is going. Okay, why is there inflation? Why is everything dropping? Why is dollar rising and the like? So we're going to look at that tomorrow. Tomorrow is for a little bit of fundamental analysis. Okay, so with this little bit of knowledge, it might take 2 months, 3 months before you can get your edge, but trust me, it's worth the practice. So someone is trying to ask a question. Let me allow you to turn on your mic. So Oluwashende, Oluwatimilei. What's your question? It's recorded for everybody, not only you. Recorded for everybody. So is that your question? Any other question, please? Any other questions? Now you can turn on your mic and ask questions. Okay. Any other questions?
Sorry, boss. Please, can you hear me?
Sure, I can definitely hear you.
Sorry. What's the difference between a change of character and a BOS, break of structure? Because when you were trying to show, look at where you are now. I can see a shock there and a BOS. What's the difference between the two?
All right. I don't know if my network will carry this now. First thing, the change of character is the first break of structure. You understand? Because it's just signifying that the trend is about to change course from bullish to bearish. That's why it's called a change of character. And then it won't be reasonable to have another change of character here. Where is it? Yeah. It won't be reasonable to have a change of character here. You know, normally you can still call a change of character a break of structure. Okay? But the ideal term is change of character, especially when it's happening for the first time. You understand? So this is the first break of structure after this inside trend. You can see now after this bullish trend, this is the first break of structure. So that's why it's called change of character. It's trying to signify that probably there's going to be a change in the trend once these supply zone gets mitigated. You understand? Then I use break of structure here because now we've broken structure already. And then it won't make sense to use change of character. You understand? It's always change of character first, then break of structures. Okay. Okay. So
thank you.
Yeah, I think we're clear now. Any other question?
Yes, sir.
You can ask your question if you still have questions. I'll be waiting for 1 minute, okay? This is 8:44. Once it's 8:45, we call it a night and you get the recording ASAP. So 1 minute left. We're already up for the 3 minutes.
Hello, boss.
Yes, I'm with you.
Please, I would like you to explain this change of character. Like, I know you just said something about it. I'm still down.
Okay, confused. Now, look at this downtrend now. Let me clear this a little bit. Yeah, look at this downtrend over here. You can see it's a very strong downtrend, right? And whenever there's a break of a previous low to give us a new low, just like this. Just like this one over here. We call it break of structure, right? And then when there's another break of previous low to give us a new low, what do we call it? Yeah, definitely we call it break of structure, right? Fine, that is correct. Then you can see it's a very strong downtrend. But the moment it fails to give us a new low and breaks the previous high to give us a new high, that is a signification, right? Signifying that this trend might want to change from a downtrend now to an uptrend. You understand? So we can call it a change of character now and not a break of structure, because that is the first, it's still a break of structure, but the ideal term is change of character. Why? Because it is the first break of structure that is telling us that is breaking the previous high. You can see there's no high that has been broken over here, at least for this trend over here. Then we can see that the market is trying to break a previous high, giving us a new high. You understand? So that is called a change of character. It is the first break of structure after a very strong trend. Okay? Yeah, the first break of structure after a very strong trend. After this strong downtrend, then you can see something like this or something like this. You understand? So that's a change of character. You can see there's a change, right? Look, when looking at it, you yourself, you can see that no, there's a change already. You understand? So there's a change in this market trend over here. Sorry, over here. That's the first break of structure. And then the next will be called break of structure. You understand? So I think I'm clear now.
A little bit clear.
All right, so you can rewatch and then you get it better. If you still have questions, I'm always available on WhatsApp.
Okay.
So,
boss, can I ask one question, please?
All right, I'm with you.
Please, can you please go back to that last chart, the last part?
This one?
Okay. Yeah. Yes. Draw it down. Not that the real chart.
Okay.
Yeah. Oh yes, take it down a bit. Like the last demand zone. The last demand zone.
This one at the top.
Yeah, the one at the top.
Okay, that's the supply. So that's supply zone. Yes.
Sorry, I want you to like bring it down. Thank you. Like at the top there, I'm seeing something like is it a mitigation candle that is buy to sell candle?
The one exactly here.
No. Go to the top.
Okay, the top.
Last high. The last high.
This one here.
Yes. No. The next one.
This one.
Yeah, no, the one after that one.
Yeah.
No, to the top.
Okay, this.
Yes. Is that a mitigation candle?
Well, some people call it
candle.
Yeah. That's what people call it. Something like that, right? This one here.
Oh, yes. Is it not the same as a demand zone?
Yeah, sure. This is supply zone now.
Sorry, supply zone.
Okay, yes.
Can we actually take a trade from there?
Yeah, because it's very extreme. But remember, we're talking about confluences today. So that's why I didn't talk about it. On our Fibonacci, from this high to this low, you can see now, this is on 0.7, you understand? So that is extreme enough for taking sales, you understand? That's why I didn't disturb myself on this one, okay? But nonetheless, you can still take trades there though. It's very extreme.
Okay.
Yeah, it's very, very extreme. But this is exactly on the Fibonacci level. That's why I was only talking about it.
Okay.
Yeah.
Thank you.
Okay. Any other question? I think no one has any question again. This is 8:50. So I'll wait for 1 minute again. In the absence of any question, then you get the recording and we'll call it a night. And then we'll meet tomorrow for fundamentals, because without fundamentals, you are not complete. Normally, every student is meant to be taught fundamental analysis, no matter what you are taught in the market. Even though your mentor does not trade fundamentals, you should still be taught. You should have a knowledge about it. So tomorrow we won't go deep into fundamentals, just the recession and inflation talk. Nothing much. Okay, this is 8:50. If you have not subscribed to my YouTube channel, you can do that. It goes a very long way. This is 8:51, guys. So that will be all for now. Let me stop the recording.